Hello, Jim here. Selling options is a great way to make some extra income, but two things are really important. One is patience. Sometimes waiting an extra week or two can make a big difference in a position. And then also changing the way you do things, changing your strategy. I've recently had a strategy change. I'm switching from covered calls to what I like to call covered call spreads. So instead of just doing a covered call, I'm going to do a covered call spread, which gives me more choices if a stock shoots through the roof. It can be the difference between really clipping your wings or missing out on upwards opportunities, or being able to get those opportunities, or maybe even part of those opportunities, depending on how quickly a company or stock goes up. Today, I'm going to share with you a couple of companies where this is happening. One is Eat, which is the parent company of Chili's. And then the other one is Clorox. And both of these, patience was a virtue. And I'll also talk about one or two other stocks that are currently going through a period where patience is a virtue. So stay tuned. I think it's going to be well worth your while. Okay, the first stock I want to talk about is Eat, Brinker International. This is the parent company of Chili's. They also have an Italian chain too, but they kept hitting lower lows. Back starting in July, they hit a new low in August, then another new low in early October, then another new low in early November. And it just looked bleak. There wasn't any major reporting. You look at the comments, everybody was buy. There are a lot of people like, well, why is it going down so much? Is there something fundamentally wrong with the company? And the answer was no. Profitability looked good. Growth looked pretty good. Valuation wasn't crazy. They don't pay dividends. The earnings, they actually had good earnings in November or late October, and they still went down. The previous quarter, their earnings were nowhere near as good, and they went the other way. They went up. So there wasn't anything to point to. And during this time, I had a vertical put credit spread, and it got assigned to me. And I had to be patient. I had to take my time because I knew, and I like to say this to a lot of people, is short term, the market is a voting machine or a gambling machine. Long term, it's a weighing machine. And I knew this company had value, and there was no reason for it to drop as much as it did. So my guess is at the time was it would come back. And I actually mentioned this in a lot of posts to my members. And sure enough, it did. Now, I ended up keeping the shares. I never sold any kind of covered call. I kept the shares. And it's primarily because if you look at what I shared with my members, I had it in the wrong account. I had this in a $70,000 Roth account. And this trade or this position was way too big for that. So here I just mentioned to my members that I made 440 on the trade. It was like a 30% return for the 6 months I was in it. So here I wrote, I decided to sell my shares and Eat. I placed a market order to be sure that they sold quickly, which was a mistake. They are back up again. And, so I could have held on and done even better. And I had some members that did. I actually helped a member yesterday be able to handle his, he actually sold a covered call spread, which is what I'm telling people to do currently. So instead of any companies like this that have been beaten down or potentially momentum companies, instead of selling a covered call, I'm either selling a covered call spread or I'm not even doing a trade. I do have a checklist that I share with my members. I'll talk about that at the very end. We'll take a quick look at it. But covered calls, they're good, but they're also bad. They can really limit your upside. They can lock you into a return for a long period of time. So the biggest change to my strategy recently is being very careful with covered calls. I'm either going to do a covered call spread, probably, and these are new trades with rolling. It's a little bit different. But I am, for any new covered call related trades, I'm going to do a covered call spread, or I won't do a covered call at all. I'll just let those shares, hopefully regain some of their value, like what we saw with Eat. So at this point, I'm happy to just get out of it. If I do another trade on them, which I am thinking about, I will do it in my IRA and not my Roth. I attach the spreadsheet to show all the trades. It is attached below. So I do share a lot of details. And the spreadsheet's actually a download directly from Fidelity. And this, I wanted to just show you quickly why it doing it as a covered call spread is better than a covered call. So if all you had was a covered call, you would have to close. So buy to close, you would have to spend $8.60. It would be really hard to roll. Like if you wanted to roll it to 145, you'd have to spend between anywhere from about $800 to $1,000 per contract. Now, if you have a spread, you have more choices. So you can widen the spread. I could say, well, I'll do a 155. And then suddenly you're potentially picking up a credit. When this happens, like something like a 170, 115, like a $1.70 debit, 115 credit, or up to a $4 credit, I usually will go pretty close to this $4 and try to do a credit and you got to be sure over here that this is net credit. But I will give it a try. And I've been surprised a couple times it's actually gone through. So having a spread, it gives you more choices. You can widen the spread. You could say, well, let me just remove the long anyway. So I'm going to convert this into a covered call. I do this also with my vertical put credit spreads. I convert them into cash secured put. So you're doing the same thing. You're turning it into a covered call. So here I could literally make $4.30 on one contract up to $8.40. So I know I can go higher. So maybe I'll do 155. I'm still making anywhere from 90 to 480. So I could even go a little bit higher, 165. I'd look at the delta. That's a 21 delta. I might go a little lower just to bring in more premium, and then I'd look to see, well, what is that? That's a 29 delta. So I might try to go to 160. So by having it as a credit spread, a call credit spread, it's easier to roll. You can move it higher. So originally I was still going to try to do some covered calls and not, in other cases, do call spreads. But going forward, I'm not going to be doing any new covered calls. I'm only going to be doing call spreads. Now, with rolling, it's a little bit different. You don't have as many choices. And sometimes, once it is a covered call, it's a lot harder to roll it from a covered call to a call spread. And we'll talk at the very end. I'll show you my checklist that I provide in my membership to help you make these decisions. So here you can see what it looks like. Now, I've had some others that have been assigned to me, like Clorox. If you took my trade or followed it in my membership, Clorox, same thing, down, 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 lower, lower, lower. Now it's rebounding a little bit. It's up to 105.35. I think my cost basis is pretty close to that. I'm really tempted to sell a covered call, but it might limit me. So again, I would look at a covered call spread, but I'm even going to wait before making another trade because just like Eat or Chili's, I think they could rebound even more. So if I sell a 110 covered call spread, I could probably take it up to 120, 125 and bring in a much higher return. And just like Eat, great company, no reason for it to be pounded and down so much. I mean, great profitability, slow growth, but I look at them like a company, like a Procter & Gamble or a Coca-Cola. They have good dividends. They pay nearly 5% dividends, and they've been increasing them for 48 years. So I believe they're a dividend aristocrat, a company I wanted to own a long time. And, I don't want to lose them too quickly. They also had fairly good earnings on 11.3. So again, another opportunity. Now what happens is a lot of times people get impatient and they sell too soon. Let's look at another company that again I had 3 recently get assigned to me, ODD, Oddity Tech. Another one, lower lows, well, it must be something terrible about this company. It's amazing to me how many people say, well, what a terrible company. The stock price keeps going down. And it's like, again, you have to look at the fundamentals. I like to look at the fundamentals. And this is an AI company. So now they're based out of Israel, but they've got really good profitability. I mean, 29 return on common equity, good cash per share. They make 225,000 per employee. I don't think they have very many employees. Growth is fantastic. Valuation, 17 PE compared to 1562. You look at like a Palantir and you're spending 250, 300 PE, and they're making a lot more money. If you look at their earnings, they had good earnings just recently on the 19th. If you look at earnings estimates, so they're going to go from 214 to 238 to 283 to 329. So long term, you could double, triple your money with them. Again, it's patience. I'm very tempted again to sell a covered call. I might do a covered call spread, but I'd rather them recover into the mid 40s, maybe the 50s, and sell covered call spreads maybe in the 60s and 70s. So those are just a few of the companies. I have one more, and I'll probably get a little bit of kickback about this, and it's Mara. Again, I've had a lot of people tell me, "Oh, what a terrible company!" It's Mara. They've gone down, and they don't. You got to do your homework before you make comments like that. Now you talk about being hammered. They were hitting new highs, and then they've just down, 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 down. A lot of it's because of Bitcoin, but at some point you can see they're rebounding some today. I would not be surprised if they're back in this $20 range. For those of you who don't know anything about Mara, they are a bit Bitcoin miner, but they have 16 data centers. At least that's what ChatGPT told me. They just inked a deal with a company in France that's a subsidiary of the French power company. They're converting all their data centers, and they're probably going to have them converted at maybe second, third quarter, or maybe even sooner next year, where they can run Bitcoin, meaning they can mine Bitcoin. They can also host almost like an Amazon Web Services or Azure, or they can do AI. And the beauty with them is they also have some of their own technology. They have a data center in Texas. If they get a call from the governor that, hey, we got issues with the power grid, they can turn down the power. They can, shut it down fairly quickly, easily. I don't know if a lot of the AI-based hosting can do that. So it'll be interesting as they change. If they ever get momentum like an AI company, I could see them shooting up. And they do own a lot of Bitcoin, not as much as Strategy or MicroStrategy, but a fair amount that they keep mining. Now, they have made a change recently that they're taking a lot more cash. So they are holding back a lot more cash and selling some of the Bitcoin to be able to fund some of these new data centers they're building. So the moral to this story is patience, and then changing your strategy for things that work, and not just selling a covered call, because if I sold a covered call here at 14, it went up to 22, I've just missed a huge upside. So next, let's jump into this checklist that I set up for my members. It kind of will dig into this strategy change a little bit more. Okay, now I've been working on a bunch of different checklists. I'm going to add even more, but the one I'm talking about, I have a covered call checklist, and I have this covered call filter checklist. And this is, you use this before the covered call checklist. It's kind of to help you determine, do you do a covered call? Do you do a covered call spread? Do you not do a covered call? And that's what this talks about. Step one, classify the stock or ETFs. So is it a momentum play? Is it a dividend company? Do they pay a high dividend? Some companies that pay a pretty significant dividend, like a Coca-Cola, you could probably continue to sell covered calls. I may, for new trades on Coca-Cola, I may do covered call spreads, but right now, I'll probably stick to covered calls. Is it a majorly beaten down? Yes or no? Check for breakout or high upside risk. And now a high upside risk could be any of these companies we just looked at: ODD, Mara, Clorox, and maybe eat before they kind of did rebound, because you don't want to get locked in and lose your your upwards momentum, or you don't want to clip your wings. You want, if the stock goes from 100 to 140, you want to be able to pick up that jump from 100 to 40, or those $40 in appreciation. And then step three, consider partial alternative strategies. So keep upside while managing risk, sell calls on only part of your position. So it's a bunch of different things you could do. You could also do poor man's covered call. I did that I bought some really long puts, leaps on Mara, because I do think over a year, 2 years, that definitely are going to be worth more than what they are now. I could be wrong, but that's one bet I probably would take. Then you can confirm strategy fit. Does it align with your strategy? Is this trade part of your income bucket or your growth strategy? So if your strategy is doubling your dividends, you have a lot of dividends, well, then maybe you just want to do covered calls. If you're a momentum player, you like, owning these companies that shoot through the roof, the Palantirs, the APPs, some of the other ones that have moved a lot. There's quite a few, even some of the chip makers like NVIDIA and Palantir. Well, I already mentioned Palantir, NVIDIA and AMD. And then step six, you make the final decision. Now, one thing I have had members that get confused with this is you're just setting up this strategy to help you with being able to roll. If the stock shoots up, you still have to roll. When I look at my positions in the money, one thing I've gone and done is I look back, especially on the put side, to see what's been assigned to me, or I probably need to do it with calls or what's been assigned away from me. With the puts, I find that if you're 10% or more in the money and you're fairly close to expiration, the chance of early assignment is really high. Like the ones I was talking about that were assigned, I believe EAT was assigned early. And then some of the others got assigned to me the day of expiration, which was odd. Usually it happens over the weekend and you find out about it Monday morning. And this is work in progress. I'm going to make more updates to it and release it to the community. The community does suggest changes and things, but that's what I wanted to show you guys. I do get a lot of messages. Is this available, without being a member? Unfortunately, right now, you do have to be a member. I may set something up down the road if you provide something like this for you, if you provide your email. I may do that down the road, but right now, and I try to keep the membership fairly inexpensive. You can do the Trader Club at $25. I don't lock people in. You can move between levels, meaning you could be in the elite coaching program, do that for a month, and then switch to something else. So I encourage you to take a look. Details are in the description. And as always, if you have a comment, are you doing something like this? Are you looking at changing your strategies? Are you not patient? Do you take losses because you're not patient with stocks? I'd love to hear your thoughts or whatever your comments might be. Again, I try to respond within 24 to 48 hours. And just want to, again, thanks everyone. Hope have a great Thanksgiving. And thanks for taking the time to watch the video.